All right, guys, if you want to go right in the middle, we're going to get started here in just a moment.
Ann
Is already on.
Okay.
Yep. And
Hi
Nolan,
there.
my friend. How are you?
Great to see you. I apologize that I am not able to be present. Look at that yummy, those cocktails.
I know. I'm like, this is a cute setup we got in here. So guys, we are going to go ahead and get started. We are actually running early for once, which is not my usual nature, as many of you know. But we have two amazing people here tonight that I have known for a long time, and I've known you for over 20 years at this point. She's been our wonderful friend from State Farm Insurance and is a fixture in the Wicker Park Bucktown community and in the insurance community. She's been huge to my clients over the years. And then we have my friend Jules Mesner, a great real estate attorney who has a huge amount of experience in property law, transactional, as well as how to hold title to property. So what we're going to do tonight is have these ladies talk a little bit about what it takes to hold property smarter. And why we're doing this is a lot of you at home, you've either bought properties with us, you've sold properties with us, you're in the process of investing for the first time, maybe you're a first-time home buyer. And I found out just 2 weeks ago that as a buyer of property on a conventional loan, you now can transfer that once you buy it into an LLC or an S Corp and not trigger the acceleration clause that you used to. So that right there is a big change in the way that we think about titling and holding property. But the big things are, how do you title it? How do you hold it? Do you incorporate? And then also how you protect it. And that's the big thing is once you have it, the main reason why a lot of us put it into an LLC or an S Corp is that we don't want to have an issue when we have a slip and fall or something like that catastrophic that happens at our property, whether you're living there or not. And so we wanted to kick it off with Ann because Ann is going to be talking to us about property and casualty insurance, the whole situation there, as well as if she has time, umbrella policies, because for those of you that over time are planning on owning multiple properties or have multiple businesses, that is a structure for you as far as insurance. So we do not have any PowerPoint tonight. Everything is going to be just us together here for a little bit. So Ann, I would love for you to start it off.
Okay. Well, first of all, thank you for including me, Nick and Nolan. I'm a State Farm agent here in Bucktown Wicker Park. And, Nick is right. This is a very important issue and piece to the puzzle of home ownership. Not only homes, but condos, rental properties, investment properties. And there's a handful of properties that actually, or policies that would cover that, would be a homeowners, a condo unit owner's policy, a rental dwelling, depending on their need. We have the right policy to kind of mirror and assist with that. And what does that policy entail? We want to make sure that the property is properly protected for the purchase price, the replacement, rebuild of that property, as well as any contents inside, as well as the liability side of it, making sure you have the financial protection against any costly claims, as well as lawsuits, for a myriad of reasons. And then I know you talked about the personal liability umbrella policy, which is especially, I think it's very important individually as a homeowners, as well as an investment. Oh my God. Oh, I love the picture. The picture just stayed.
We'll go ahead and mute it.
I apologize. I just saw his picture come up, so I love it. So Nick, there's so many different policies and different, avenues I can kind of go down. Do you have like a specific one in mind you'd like me to talk about?
One of the questions we get a lot, Ann, and actually we had somebody ask this prior to the start of the webinar, is they said, would you be discussing water damage? Because one of the things we run into most is water and the different types of water, whether that's from a flood, whether that's from a sewage type situation, anything like that. So could you kind of run down what to look for in terms of when you're getting a policy as far as water?
Yes, absolutely. So the good news with, any insurance agent, and they call it different and different, depending on, the broker. But when we quote a new policy, the nice thing about it is when we put the information and the address up, it's going to pop up and give us prior claims notice. So we can educate our client and saying, okay, congratulations, you're going to be purchasing this home. Just so you know, there's like a match. It's called, it's like a loss report. You've had this property's had 2 water losses, and these are the 2 dates, and these are the amounts. And I think that's really big, really good to know if you're purchasing a property that this has had prior water damage. Keep in mind, all policies have coverage for water. The issue in Chicago we have is it comes down to, the basements, the English gardens kind of thing. And you need a specific additional endorsement, which is called a backup of sewer and drain. That's not standard on any policies, that has to be added to have coverage in that area. In addition, say it's a multi, it could be a homeowner's policy, it could be up to 4 units. Say that garden level is a renter. And, you have that backup of sewer and drain, which covers all the building property, but the renters also need their own individual policy, obviously a renter's insurance policy, as well as that backup coverage. So water is especially in the city of Chicago, the city shuts down these locks and the water has nowhere to go other than back into your basements. So it is an extra coverage and it's always very important. Any agent you talk to should be reviewing that coverage, at the time of, when they're quoting it.
So that's something that a lot of agents don't do, particularly when you get an online policy. And what was that coverage called again?
It's called backup of sewer and drain endorsement, and it's an endorsement on a current policy. So all of them have it. It's all an add-on. And like I said, I hate to date myself, but I've been an agent for 22 years. And every year, early February, we do a search of my book of business, all condos, renters, as well as homeowners. I send out a, you do not have this coverage, letter, just because it always happens like, oh, my basement's dry. It's never happened before. I don't want to pay that $250, $500, whatever they choose in the amount of coverage they need. And then this happens where the city, because you're never getting the money back from the city when they shut those locks down and the water comes back. And then they have, damage. And unfortunately, it's not a covered loss without having it specifically endorsed on.
What do you see, Anne, as the biggest, if you could say something to in a general audience, knowing that individual folks are going to have individual questions and situations to run through with you, what would you say would be the biggest thing you would advise for someone that either owns property, is looking to own, as far as what to look for in a policy or what to add on as an additional coverage?
Well, I mean, with the, you're talking about the investment properties, the biggest concern I have, or they should be looking at, a lot of times companies sell what's called an ACV policy, which is not replacement cost. It's so it's almost like a discounted, if something's worth $100,000, to purchase it, they're only insuring it for $60,000. And you do not want to be underinsured. So you want to make sure you have proper replacement costs. So how did they come up with that value for replacement? You want to make sure that there's because some of those policies have very limited coverages. You talk about water, you talk about roofs, things are being replaced. You have an inspector out, it looks great. 2 weeks later, you have all this water damage. If the roof isn't actually damaged, accidental direct physical loss, say a tree or something hit it, that roof wouldn't be covered, but all the interior water damage would be covered. So it just depends on the individual, and I'm happy to take questions offline, about it. But there's just a lot of different scenarios, and the policies should be pretty standard, but there are some bare bones, and it has more with investment properties, like rental dwelling kind of apartment policies.
So speaking of rental policies or rental properties, we do a lot of multifamily. Sometimes it's owner occupant. When would you say, what do you think is like the trigger point when someone should start looking at an umbrella policy versus individual policies for each property they own?
So personally, if you're a homeowner, and even a condo, I think everyone should have a personal liability umbrella policy. I mean, it not only covers the home, it covers your, you driving in a vehicle, your autos, if you have a boat, you know, it's an umbrella. It basically should be over all your, like, potential liability. When it comes to rental properties, you can only put up to 3 rental units under your personal liability umbrella policy. Once you get your 4th property, and it can be condos, 4th, not, it has to go to a commercial liability umbrella policy, which is a separate, obviously outside. And then, a lot of times if you have all these different LLCs, unfortunately, you're going to have different liability umbrellas per LLC. You can't, if they all have different names, you can't put it under one.
Ah, okay. So that's a good thing to know for those of us that are probably going to be listening to Jules here in a second, talk to us about multiple properties and how to hold title in different LLCs. So Anne, one more question for you. When someone, God forbid, does have a claim, and Anne, many years ago, you and I were and are my insurance agent on my stuff. I did have a claim. It was not my fault, but it was someone else hit me, and it was nice to have someone local to go to. If there is a claim against a property, I've heard this from other people, or like the same way with a car, what is the best thing to do? Do you call your insurance agent right away? Do you wait to see if there's a claim? What if someone slips and falls and there's not an immediate lawsuit? What would be the recommendation for you?
I mean, personally, I think you should, you put me on notice. I'm not putting in a claim, but I'm going to notate your file. We can help and give you guidance on dealing with that individual, depending on who it is, if there's injuries, if there's a demand, are they asking you for something? And, we can help educate you and that person. I mean, if it gets to the point where they have, big injuries, and then they present a claim, then, we can't not take the claim for them. Individually under your individual condo, home, or whatever, you have an underlying liability, whether you choose, you have medical payments could be between $1,000 and $5,000. And then once that's exhausted, it goes up to the minimum of 100. If it's a commercial property, your minimum liability is at 300,000. So you have the ability, send it over to us. I'm not saying it's frivolous, but sometimes we can kind of assist with those things. But when it gets to be, when they have an attorney involved and they want to sue, we will go ahead and tender that claim to State Farm, to any company, to assist you. In addition, not only do they handle that claim, we talked about the personal liability umbrella policy. So if you have if you exhaust that underlying limit of 100,000, it kicks up to your umbrella policy that a minimum of $1 million, and it goes up in $1 million increments. But over and above that $1 million, they pay for your attorney fees. It does not come out of the $1 million liability. So it's kind of a tangled web, but it's each individual. I see claims all the time like this. It's very complex. But, your agent should be your resource. It should be, be able to educate you on everything that goes on the what ifs. But it's good to have a good relationship, and especially, that they know, to assist you to how to move forward with potential exposures.
It's one of those things that you get what you pay for sometimes. So if you don't have a good local resource, talk to Anne. She can run through what you may need or may not need as your life grows and changes. That's
absolutely.
Years. Anne has a wonderful support staff. Sandy, that's been with you for many years, has been great to me personally, reaching out as I expanded my business and going back and making sure that we were covered in multiple ways. Does anyone have any questions from the audience at home or in our little group here at Arc Law for Anne? Yes. Hopefully she can hear me. I will bring this a little closer to you. Go ahead and talk a little bit.
So you mentioned the sewer backup, the coverage sewer backup. Are there any other additional coverages that, as a homeowner or the owner of a multi-unit, that you would recommend we have?
Personally, I think when it comes to personal liability, these policies are standard either with 100 and 300,000. I mean, to raise it to $1 million is $35 a year. I mean, it's a minimal cost for a much larger, coverage. So I think liability is huge. When it comes to extra endorsements, you want to make sure, I mean, it kind of goes back to just making sure they have the estimated replacement cost on these buildings, that they're accurate. And if it's been a while, have them relook at it, because I can tell you the cost for rebuilding and labor, I mean, things have skyrocketed. Myself, I had quoted like a new garage, 2 years ago for $50,000. Right now it's $170,000 for a garage. I'm like, no thanks, but insurance is the same. And if your coverage hasn't paced up and kept with it, there's a chance that you won't have enough. You can add on what's called like an increased due to like ordinance and law, like say, Chicago says, you can't rebuild a portion of that. The electrical isn't up to date. You need to you need to redo the whole amount. So I think an endorsement of increased law and ordinance is a good one also to have. It just depends on if you're a homeowner versus a landlord. So I think liability is key. I think the backup and just having, for the water damage is really big, as well as tenants. And I also think that you have to encourage, I know in this, and maybe, as an attorney, you can confirm this, but I don't know if you could force your tenants to have renters insurance, but I tell all my clients, whether you can or not, you need to request that and require it, because it just adds another layer of protection.
So Julia is nodding her head, yes, that you can.
Good, I see that. Thank you, Julia.
Also to show the proof of it, not just to say that they have it, to actually physically show the proof of it.
And in fact, if it should be in the lease as a requirement. And then if they do not provide you with the proof, there could be fines associated with that. So the truth of the matter is, like all the high rises in the city, they require renters insurance.
Right.
Obviously, if something happens to your unit, it's most likely going to affect a million other units. And so renters insurance is required. It's like relatively inexpensive. It's
Very.
like $200 for the whole year or something, $35 a month, something silly. But yes, you can absolutely require your tenants to have it, and then they have to show you proof of it. And if they're longstanding tenants, then they have to show you proof of it every single year.
So I have a question, Anne, about something that you said earlier. You said, if I'm not, just a little clarity. So if you're a landlord and you have the liability insurance, were you saying that you can have the renter's insurance under you as well, up to 3, and then after 3, it's labeled as a commercial? So as a landlord, you can cover each individual unit yourself under your policy as well?
So I'm saying, if like a 4 flat in Chicago, if you reside in one unit, it can be considered as a homeowner's policy, and then the whole building is covered, but it's a much cheaper way to insure it. Now, obviously, the other 3 units, you have coverage for loss of use, which includes loss of rents if something were to happen, as well as, additional living expense for you to go out and get, find a place to live during that time. So it's huge. I mean, it's one of the few companies that will let you write a single family homeowners policy on a 4 unit, as long as you reside in one of the unit. It's big.
And it's not considered commercial.
It's not considered commercial, as long as you reside in it. So the cost is a huge difference. But I have people where they have 3 units in the front and they live in the coach house in the back. Well, unfortunately, I can't, that's not all one unit, because they're insured as two separate like buildings. So the one in the back they can be a homeowner's, but the front has to be a commercial policy, whether it's a rental dwelling or an apartment policy.
So even though they're the same PIN, it's still considered 2 different buildings.
Correct.
I want to piggyback off that real quickly. So where you were talking about the 4 unit, owner occupied, rents the other 3 units, if it's covered, all in one, can you still have, or can the tenants in the other 3 units still have renter's insurance I'm guessing maybe it would be primarily for personal property, maybe?
Yep, they need it for their own personal property because the building only covers the structure. Everyone
Okay.
has to have their own individual renter's insurance for all their personal belongings they bring into the unit.
And then as the owner, my homeowner's insurance would cover my personal property because I own the building.
Absolutely. So your
Okay.
homeowner's insurance is 75% of the coverage a building amount. So if your building's insured for $1 million, your personal property defaults to 750,000.
Okay.
And then Julie, I just had a quick question. So you confirm that we can require
Mhm.
tenants to have renters insurance. Can we also, I believe it's called, request to be certificate holders? So in the event
Yes.
their policy lapses, they don't pay, we are then notified that the tenant, their policy has
Yes.
lapsed?
Oh.
Yeah, so we see it all the time. We add them as certificate holders. So if their policy lapses, then the landlord gets notice of it.
Hmm.
That is great. I did not know that.
That is great.
I'm
I'm
learning.
But they have to ask
Learning
for it.
from over
They have
20
to
years.
ask for it, and it's primarily the high rises that really do it. And but it does happen, or management company. If there's a apartment management company where there's multiple, they usually also require that.
That is great information, guys. Does anyone else have questions for Anne that was not able to get their questions answered yet? All right, well, guys, we really appreciate you being here. Anne, can you tell everyone what's the best way to get a hold of you?
Yes. Well, I'll give you both ways. You can always call my office. And should I text you like my contact, Nick, and then you can share?
Actually, because
You
this is
can
being
email
recorded-
me at, I'm
Yes.
sorry?
Oh, because this is being recorded actually, versus in the chat, go ahead and
Oh, right.
actually just give it to us.
Sure. So my email is ann@annnolan.com, ANN@ANNNOLAN. My office number is 773-342-5300. And my cell phone is 773-255-6185. And it's truly best to text because I feel like my messages just don't drop timely. So I want to make sure I get back with you timely.
And trust me, Anne is always timely. If she is ever out of town or doing something else, her office gets right back to you. Can't say enough about, as someone that has had a claim and had things go on, good and bad in their life, both myself and properties that I've owned. Insurance is one of those things that you try to cheap out on and don't think about. And then the next thing you know, it's like anything else in life, you get what you pay for. And when you don't pay for it, that's when somehow life happens. So, Anne, this is a huge help to us tonight. We really appreciate you being here. And thank you for taking some time out of your evening on this beautiful night. So thanks again.
Thank you. I appreciate the opportunity.
Absolutely. So guys, we're going to go ahead and turn it over to fabulous attorney Mesner, who's going to teach us a lot about how to hold title to a property. She did this course or a version of it for us as real estate agents at EXIT at our Cottage Grove office. We did not record it. And I sat there thinking, man, I wish I had recorded this, not only for agents, but for our consumers at large. And so for all of you at home tonight, we have the pleasure of a true real estate attorney expert being with us. And I'm going to go ahead and turn it over to Julia so she can give us all the information that we need.
Well, thank you. So I very much so agree with Anne. I think that she was an excellent segue into what I'm about to talk about, mostly because I'm a very big believer in being proactive instead of being reactive, right? And so I believe in making sure that everything is done on the front end. So in the event that something should happen, and it always does, we're already prepared and we're not overpaying and super stressed out and having to deal with a lot of issues that we wouldn't have to deal with if we just prepared ourselves from the jump, for lack of a better term. So there's a lot of ways for us to protect ourselves in terms of entity creation and kind of what it is that how we should be holding the title to real estate, right? So most people don't know that all of their real estate transactions are a matter of public record. And anybody, you don't have to have like some high-tech real estate, technology to find out details about somebody's real estate transaction. You can simply use a website that got me through law school, Google, right? And find out all the details about what we think are our intimate real estate transactions. And the reason for that is because at the end of every real estate transaction, there's something called a deed, right? And that deed holds all of the intimate details of what we think is a private transaction. It's seller's name, buyer's name, property address, PIN number, mortgage information, right? All of those things get recorded at the end of that real estate transaction. And as soon as those things are recorded, they become a matter of public record. So anybody with a laptop, cell phone, tablet, all of the above, can simply type in your name into Google and find out all of the details of your real estate transaction, which then makes us targets of a lot of things, right? We live in a very frivolously litigious society. Unfortunately, PPP money has run out. And so people are looking for a lot of get rich quick ways. And by us having a ton of assets, you know, we all want to be very rich. I'll speak that into existence for myself. I want to be very rich, but I want to look very poor to the general public. Because again, I do not want to become a target of any type of frivolous litigation, right? And so then the question is, how do we protect ourselves from frivolous litigation? What is it that we can do to make sure that our assets are protected and that we're protected? And there's a couple of things, right? First and foremost, I believe in real estate privacy. I preach it to all of my clients. And what does that mean? That means that we never hold title in our own name, right? So you should never be able to Google Julia Measure and find out what assets I own. And so first and foremost, we can put our property into something called a land trust. And what a land trust is, it's a vehicle that holds real estate privately. And so on the deed, instead of the home buyer being Julia Measure, the home buyer would be Chicago Title Land Trust number 12345, right? Now, the way that a trust is set up is there's the trustee. I always use Chicago Title Land Trust Company. And then there's the beneficiary of the trust. And the beneficiary of the trust is the legal rights owner to the property. The beneficiary of the trust retains the same legal rights to the property as they would if they held the property in their own name, right? So I have a lot of clients that will say, well, no, Jules, I don't want to put the property in a land trust because then it's not in my own name. The deed's in a trust number, it's not in my name. I'm going to lose all rights and control. Completely wrong. You have the same exact legal rights and control to the property in the trust as a beneficiary as you would in your own name. What the trust also allows you to do, it allows you to name something called a contingent beneficiary. So what that means is the land trust not only goes from a privacy protection tool, it now also goes to a very affordable estate planning tool, keeping your property out of probate. So what a contingent beneficiary is in the event something happens to you as the beneficiary, the property automatically within the trust passes to your contingent beneficiary. So it keeps the property out of probate, which we know is a very expensive, time-consuming process that I wouldn't wish on my worst enemy, but it also protects your property. So for instance, let's say that your contingent beneficiary is your son, right? And your son happens to have a gambling problem or a drug problem or a shopping problem, and has a lot of creditors after them, right? Now, if your son or your child were to inherit your real estate in their own name, those creditors would be alerted and those liens would then automatically attach to their real estate. However, if the property is in a land trust and it passes to your child within the trust, the buyer of that property never changes. It's always Chicago Title Land Trust number 12345. It's just the beneficiary of the trust changes to now being your son. So the creditors never have any idea that your son has now acquired another piece of property. Make sense?
Yeah.
How does refinancing work with that?
That's a really great question, and I'm happy you asked that. So refis and lenders, there are a lot of lenders that understand land trusts, the need for land trusts, and the importance of land trusts, and allow their clients to close directly into the trust. and will allow their clients to refi without taking the property out of trust. There's also sub-lenders that don't understand what a land trust is, don't know how it works, and it's always easier to say, we don't do it, than to say, I don't know how to do it, right? So in those times, I always advise that my clients do not take no for an answer. I rarely take no for an answer, and to contact me and let me have a conversation with your lender, right? Because it's a fairly easy process. And a lot of people just need to be handheld through the process, and I'm happy to assist with that. Okay, so land trusts are one option. I also am a very big believer in layering, right? In today's day and age, we're very exposed, right? Social media is the way of the world. I post all of the intimate details of my life on social. I mean, literally, I cannot go grab a coffee in the morning without posting about how grateful I am for God for making coffee, right? And so throughout most of my life, you will know where I'm at and what I'm doing, mostly for professional purposes. I try to keep my private life just a little bit private, right? However, because we are so exposed, it's very, 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 very important in today's day and age for us to be layering. So land trusts give you privacy protection. They do not offer you liability protection, right? What offers you liability protection is LLCs. So it's, in fact, it's in the name, right? LLC is a limited liability corporation. And the purpose of an LLC is to limit your liability to the assets within that LLC. So if I were to buy a property, let's say I were to buy a multi-unit, right? In my own personal name, and one of my tenants happens to slip and fall during the winter months because I did not salt the sidewalk well, because let's be honest, I'm never gonna salt a sidewalk. Just not gonna do it. Right? And so one of my tenants slips and falls, breaks his leg, and then Googles Julia Measure, and here she is, this attorney, owns businesses, and he's like, this was well worth the fall,
Mhm.
right? So when he sues me in my own personal name, all of my assets are now at stake, right? So the law firm, I own gyms, so my gyms, anything I have in my personal bank account, he can come for all of those things, right? However, if I were to have bought my building in an LLC, or if I were to have bought my building in my own name, but then quit claimed it into an LLC, then he is limited to only the assets in that LLC, right? And I always advise my clients to have separate trusts and LLCs for every property that they have, because then that liability is only limited to that property, right? Furthermore, if you spread your assets out, okay, so I have clients ask me, well, Jules, if I put my property into a land trust, then I can't be sued, right? Because it's not in my name. So I can't be sued, or no judgment can be entered against me. And that's incorrect. You can still be sued and a judgment can be entered against you. However, if a judgment is entered against Julia Measure and Julia Measure owns real estate in her own name, that judgment automatically attaches to my real estate, right? So if I were to go sell my property, what happens is you pull a personal information affidavit and that judgment pops up. And so now I have to pay off that judgment before I can sell my property, which happens to a lot of my clients, right? However, if you own your property in a land trust, right? Or in an LLC, and a judgment is entered against you in your personal name, that judgment does not automatically attach to your real estate, right? Or if you have a judgment against you in your personal name and you have several land trusts or LLCs, and that judgment attaches to one of them, it will not automatically attach to all of them, right? So if we put 10 properties into an LLC and 10 properties into a land trust, then, and someone finds out about the trust for that LLC, then that judgment attaches to every single piece of real estate in there. So we want to spread out our assets and make it substantially more difficult for anybody to be able to locate those assets, right? So I'm a very big, like I said at the beginning, I'm a very big believer in layering. So it's, the question that always arises, and it's, Jules, is it a land trust or an LLC? And the answer is, it's not an or, it's an and. right? So it's a land trust and an LLC. And we make that LLC the beneficiary of the land trust. Because now you have the liability protection of the LLC, and we have the privacy protection of the land trust. So again, now we're doubling up, right? Now are you bulletproof? You have a very, very, very good bulletproof vest on. It may not necessarily leave you completely unwounded, but it's definitely going to save your life. Right? And so again, have these conversations if you're an agent, have these conversations with your clients at the onset of the transaction. If you're a consumer, bring these conversations up to your attorneys and to your agents at the beginning of the transactions, because you want to make sure that you are lined up that you're set up from the jump. Because once you close, right? Once you close in your own personal name, that information hits the public record. And unfortunately, I don't have a magic wand eraser that can go and erase the internet. I just don't. So then the question becomes, well, Jules, if I've already closed in my own name, is there anything that I can do, and what is it? And the answer is yes. You still can quit claim the property from yourself into a land trust and make that LLC the beneficiary of the trust. Now, it's not as good as if you did it from the onset, but 80% of the world has no idea what a quit claim deed is. So they're going to think that you've sold the property from yourself to somebody else. The 20% of us that know what it might be, 10% of us still don't really know because they call it a quit claim deed. That's not what it is. I'm saving you all embarrassment. Say it together, quit claim deed. So it's quick, but it's not called that. Okay, it's quit. And so they still have no idea, right? So then the 10% still might know, but that's a risk that you should be willing to take. So yes, you can still quit claim deed the property post-closing, because you still get a good amount of privacy protection and you still get the estate planning, right? Which is very, very important. And I really, 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 and I'm going to add one more really on there, preach estate planning, because especially us young folks, I'm going to call myself young, we think that we are invincible. Nothing will ever happen. Okay, nothing can happen to me. I have another at least 100 years left and I'm all good and great. I don't have to worry about it. And then things like COVID happen and a whole pandemic where half the world gets wiped out and we don't have our affairs in order. And I can't speak for anybody else, but I'll speak for myself. I work really, really, really hard for my assets. And I want those assets to go to who I want them to go to. I don't think the state of Illinois should make that decision for me on my behalf. And so in order to ensure that, I make sure that my affairs are in order from the jump, and that I have trust set up, and that I have my estate plan set up, and that I have my insurance set up. So in the event that something should happen to me, all my affairs are already in order, because I can't even begin to tell you how many clients I have who's, I've had several sales where the seller dies in the middle of the transaction, right? And then we have to halt the whole transaction, and then probate court comes, and probate court, I don't know if you know, I went into the wrong line of legal work, because I only charge $650 for real estate transactions, but probate attorneys, their retainers start at $5,000 for seamless transactions. And let me tell you that a probate matter is never seamless. So most of those matters are $10,000 and above. Tie up your real estate for at least 6 months to 2 years, 3 years. And it's going to impact your family and your loved ones significantly. I've also seen a lot of family members who had great relationships, right, during the lives of their loved ones, all of a sudden have terrible relationships when money has come into play. And so for the sake of your family members, make sure that your estate planning is set up. Even if you have an LLC, I don't know if you guys know this, so most LLCs have operating agreements, which is something that your attorney who creates the LLC for you should create for you as well, right? And the operating agreement states, who has the power to sign documents, who make decisions, who holds how many percentage of shares, right? So if I sell property out of that LLC and Jules and Nick own the LLC together, Jules gets 75%, Nick gets 25%.
Only
You see how
25?
I did that?
Only
You see how I
25?
did that? So things like that. But what you can also put in the LLC is a clause about your estate planning. So in the event that I should pass, all the assets in my LLC then pass to, or my percentage in the LLC then passes to, and you leave it to whoever it is that you'd like to leave it to. So the question, one of the questions that was asked was, so FHA, right? A lot of our home buyers are FHA buyers, and FHA will not allow their clients to close into a land trust or an LLC. They just, you know what? I don't know. I'll have to get back to you on that. That's a great question. And that might, I don't know. I want to say no. I want to say if FHA doesn't, then VA also doesn't because they're government subsidized. So it's because the reason that they don't allow it, FHA doesn't allow it, is because they have to make sure that the buyer fits certain criteria, right? And so they want to know exactly who the buyer is. And since the point of a land trust is privacy protection, then that's kind of why they don't want it. And I also have to say that land trusts are state specific. There's only 6 states in all the United States that acknowledges land trusts. Illinois and Indiana happen to be 2 of those states. California, Florida, New York, somebody else, I forget. But we happen to be very lucky to be 2 states that do acknowledge land trusts. And when I say acknowledged, I mean, there's actual statutes, right, that support land trusts. So in the event there's any type of litigation, there's actual law that supports the land trust. So FHA will not allow you to close directly into a land trust. So we can do the quit claim post closing. Now, the question that I commonly get asked is, well, Jules, I'm not allowed to change in a mortgage. Okay, there's a clause that says that this loan is being given to the borrower for the borrower to own that real estate. And in the event of sale, or in the event that the rights of the property are transferred, then the mortgage, the balance of the note becomes immediately due, right? So then the question is, well, Jules, if I put my property in a land trust, or if I put my property in an LLC, do I risk losing my mortgage and having to pay it off immediately? And the answer is, it depends, okay? And the reason it depends is this. If you put your property into a land trust and you are still the beneficiary of the trust, then you are still the legal rights owner to the property. So ownership has actually not changed. Same thing with an LLC, right? If the LLC is a sole member LLC and you are the sole member and you were the original buyer, then ownership again has not changed because you are the original buyer and you are the only member of that LLC. And the truth is, and this is a secret that we're going to keep amongst friends, okay? If anybody asks, I'm going to deny that I ever said this and I ever mentioned.
Even though this is being recorded.
Even though this
and
is being
broadcast on
recorded,
YouTube.
and I'm going to pretend like this wasn't me, it was my twin and whatnot. The truth of the matter is this: as long as your mortgage is being paid, there's too many mortgages for a lender to randomly start checking deeds. Just too many. So as long as your mortgage is being paid, your lender is not going to do a deep dive into the entity holding the property. However, if you default on your mortgage, right, then obviously your lender is going to start taking a substantially closer look because they want to get their money, right? So if we're following all the rules and regs, we're making sure that our mortgage payments are on time, we're paying our taxes, we have property insurance, and we're doing all the things that we need to be doing. And we've simply deeded our property over to another entity for liability, estate planning, and privacy protection. It's not something that you should really be concerned with. So that's kind of the long and short of it. I didn't dive too deep. I know that there's some questions about S Corps and such, and what's the difference between an S Corp and an LLC. And a multiple partner LLC versus a single partnership and all those things. And to be honest, the true answer that I can give you is that's a conversation that you need to have with the CPA due to taxation purposes. So really the differences between an S corp versus a regular corp versus an LLC, it's all about how your company is being taxed. And so everybody kind of has a different need about their taxation. And so I would really advise having that conversation with your CPA to see what best entity fits your needs. And then whatever entity it is, I'm happy to guide you through how to set that up.
So we do have some questions from the audience.
Okay.
Between chat and then, so we had, before we even started the Zoom. There is a question on S corps versus LLCs in general, though. Your preference as a real estate attorney would be to do an LLC versus an S corp?
Yeah.
Okay, and that's, so the follow-up to that then from the same person would be, is there such thing as a sole member LLC?
Yeah, absolutely.
That's a-
Absolutely. So a lot of LLCs are sole member LLCs. And so like, for instance, Nick and I were talking about 1031 exchanges before we started this segment. And I don't know if you guys know what a 1031 exchange is, but it's a corporate gains thank you, a capital gains deferment, right? And so when you sell your property, if you make a profit, none of us want to pay the capital gains on that because it's very high. It's like over 20%, right? Which could be a very, very hefty chunk of our profit. And so what we can do is we can roll over that profit into buying other real estate. I had a transaction where a young lady was selling her property. She sold a property that she had bought in her own name, and she was buying another property, but she wanted to buy it into an LLC. Right. And so the rule is for 1031 exchanges is the same entity that sold it has to be the same entity that buys. So I had a conversation with her 1031 exchange guy, and everyone has a guy. It's like such a Chicago thing to say. But her 1031 exchange guy, and he explained to me that as long as she had a sole member LLC and she was a sole member of that LLC, it's the same entity. So there is absolutely sole member LLCs. You could also have multiple member LLCs. It's completely up to you.
I have a question. So, post closing,
Mhm.
is there a time frame if you've already bought a property to flip it over into a land trust or LLC?
No. You could do it at any time.
As long as you're the owner of it.
Correct.
And then this was a question to kind of piggyback off that was asked during the Exit Strategy Realty session with you.
Yeah.
Was that if someone they don't have an LLC formed yet or the land trust, they can absolutely write it up as like land trust TBD or LLC TBD during the purchase agreement, and then clean that up during attorney review during the formation of it. Correct?
So yes and no.
Okay.
No. No, I'm actually gonna, it's not a yes or no. It's
Okay.
a no. And so what you would do instead of that is if you were going to be putting your property into a land trust and you knew that you were going to be doing that, all you would simply do is you would reach out to me and say, hey, Jules, I'm out house shopping. I'm looking to get some buildings or whatever I'm looking to get. I'd like to make some offers in a land trust number. I would simply get you some land trust numbers. Okay, that is free of charge. There's no fee for that. The land trust company doesn't charge you for that. I won't charge you for that either. And you can make offers in land trust numbers. So you don't, it's not like land trust TBD because someone has to actually sign that contract, and the land trust TBD is not a real person, right? And then for the LLC, if you are going to ultimately be closing into an LLC, but you don't have it created yet, you can make that contract as your name. And then I will amend, once I create that LLC for you, I will amend the contract pre-closing to make sure that you're closing directly into the LLC versus closing into your name. But you have to put like a real entity on that contract. So we're either putting a land trust number on there, and then once we get that offer accepted, I will draft the land trust, and we will get the trust agreement over to the attorney for them to review. Or if you're putting it into an LLC and you don't have the LLC created quite yet, we will put it in your name. I will then create the LLC for you, your operating agreement, and then we will send an amendment to the seller's attorney to change you to the LLC as the buyer.
So that we have one more follow-up question to that, but first, just a note, obviously, we've already discussed that it is key to, yes, you can do it after the closing, but if at all possible, do it prior to the closing, so there is no record of you as the owner. So just reach out to Jules or your trusted real estate attorney and let your agent know. Everyone at Exit Strategy has been trained on this or is watching this video after this. So I have one more question, and I know we have some others from the audience. Someone's buying their first condo.
Mhm.
So there's actually somebody, I believe, that was on with us earlier, that they're in the process of buying their first condo. Is it too early to start, or?
No, no property ever, never should be in your own personal name, okay? It is never too early, like I said, proactive, right? And so if you're buying your own personal condo, you're gonna live there, cool, but you don't want people knowing that you just bought a $500,000 condo. Why would you want anyone knowing that? Because then again, you are a target for frivolous litigation. You have assets, you have a $500,000 condo, right? And then also you want to create estate planning for that condo. So, you know, a lot of first-time condo buyers or home buyers, maybe they're single. And so, especially for us single folks, I'm single too, especially for us single folks, I want to make sure that my estate planning is set up and that my property goes to who I want it to go to, right? To the heirs that I want it to go to. And so no, whether you're buying your first time condo, whether you're buying your first time multi-unit, whether you're buying your 10th time investment property, flip or hold, it is never too early to protect yourself and shield yourself from becoming a target, period.
That's huge.
Are you still eligible for a homeowner's exemption?
Absolutely.
Okay.
Absolutely. You have the same exact rights as you would if you own the property in your own personal name. And then someone else asked me, well, how do you pay taxes if the property is in a land trust? The same exact way that you would pay the taxes if the property was in your own personal name.
So you're losing nothing.
Losing
Losing
nothing,
nothing.
losing nothing.
Any other questions from our audience members here at Arc Law or at home on the Zoom?
Yes, I want to make sure that I understand it. So in order to start off in a land trust, you cannot have an FHA or a VA loan. And
Correct.
so it'll be for residential, it will be a conventional loan.
Correct. And you also
This-
want to make sure, and I'm sorry to interrupt you, but
No.
if it's a conventional loan, you want to just specify with your lender at the onset of the transaction that they will allow you to close into a land trust. Because again, there are some lenders, and especially the lenders that sell off their loans on the secondary market, that will not allow you to close directly into a land trust. And then there are a lot of lenders that will allow you to close directly into a land trust. So you just want to have that conversation with your lender at the onset and say, hey, privacy is a very big concern for me. Estate planning is a very big concern for me. I want to own my real estate in a land trust. I'm getting a conventional loan. Will you allow for me to do that? And then let them give you that answer. And then again, if the answer is no, it's still not a no. It's a cool, I'm going to have my attorney give you a call so that you can further advise.
Okay. And then for the FHA and potentially the conventional loan, you
Yeah.
would do a quick claim
Yes,
afterwards.
yes,
And so it would be a quick claim into a land trust that has well, in my case, it would be a single owner LLC
Yep.
as the beneficiary. And
Yep.
then the way the LLC would be set up is in my operating agreement, it will show that I have 100%, and
Yep.
it'll also say what happens upon my death. So if
bingo,
something happens to me, there's no reason for probate, even though it's layered.
bingo. 100% spot on.
Okay, and it's very unlikely, as long as I am, the land trust has the LLC, which has me, it's not likely that they're gonna call the loan because it's still ultimately with me.
Correct.
Okay. Thank you.
You're so welcome.
That was a great question.
You did a
and-
great job presenting that. In fact, next time there's a speaking engagement, I'm just not even gonna come and you will do the presentation yourself.
We gotta back up. Does anyone else have questions in the room or at home?
And the truth of the matter is that I don't expect anybody to become an expert in entity creation or land trust or the setup or the layering after this really amazing 25-minute presentation I've given you. Really, the point of it is just to have that thought in the back of your mind And then when you are moving forward with your transactions, to just simply say, hey, I should give Jules a call and run by her what I'm trying to do and see how she can help me set up, you know, all the steps that I need to make sure that I'm fully protected.
Absolutely. This is great.
So guys, this was really amazing. Jules, with all that great advice, how can people best get a hold of you?
Sure. So a couple ways. I'm gonna give you all my personal cell phone number. It is 847-219-2463. I better not sit on any bathroom stalls throughout the city. I'm really good at picking up my phone, but I now have these boundaries that I'm doing. So on Saturdays after noon to Monday at 9 a.m., I'm with the Lord. But then on Mondays from 9 to Saturdays at noon, I'm available for whatever you all need. So feel free to call me or send me a text message and I'll get back to you, you know, usually within a couple hours. Or you can shoot me an email, and my email address is Julia, Julia, at ARK, ARK, laws with an S, LAWS.com. And I'll get back to you as well. And then feel free to find me on social media. I'm Jules Measure on Facebook and Jules 1885 on Instagram. I get a lot of DMs asking me about a lot of legal questions. I'm happy to set up appointments to discuss. So get a hold of me. I'm around.
Well, guys, this was amazing. I'm Nick Libert with EXIT Realty. I have no boundaries, just kidding. But we all at EXIT wanted to thank you guys for being here this evening, or if you catch this later on the replay, a lot of our videos have a long life cycle way into the future. We're going to continue to be doing these series. We do health and wellness, personal finance, charity and community, and of course, real estate every month. We circle around the city and the suburbs doing that. So check us out. You can find out more about us on our office website. That is exitstrategymovesyou.com, or you can find any of our fabulous agents. Most of us have a social media presence, maybe not as fun as Jules, but we thank you for being here and have a great evening.
Thank you.